Good evening. You're tuned into Business Day right here on ET Now. I'm Avan Dabash. A quick glance as to how the markets panned out this Wednesday before we take you through the top headlines. Well, it was a great start for the frontline indices, a gap up opening, and we went on to build onto that momentum. And it was a very strong breath, largely led by the rate sensitives, particularly the auto, the real estate, as well as the metals basket. You had a turnover also, which was fairly decent, and broader markets also showed you quite a bit of traction. So 59.29 for the Nifty, with the Sensex also higher in the session at 19,450. On that note, we get you the top headlines. The company's bill prescribes stringent norms for auditors, including a cap on the number of companies they can serve at a given point in time. Also makes it mandatory for companies to share part of their profit for social welfare. DLF finally manages to sell off Aman Resorts. The luxury hotel chain's founder, Adrian Zekar, gets the management control for over 1,600 crores. The proceeds will help the realty major to cut down its massive debt of 24,000 crore rupees. SEBI Chairman UK Sinha takes on companies for giving a raw deal to investors. Corporates leave very little for retail investors and share issues, which explains the poor response to some of the recent IPOs. India's retail king Kishore Biyani says MNC players like Walmart and Carrefour may have to wait for greater clarity on FDI regulations before putting money into India. In an exclusive chat with ET Now, Biyani says Future Group's business restructuring will be complete in the next 6 months. Bollywood superstar Akshay Kumar retains the top taxpayers trophy with a 9 crore tag for the third quarter. Salman Khan comes in at a close second. Kareena Kapoor is the top heroine. Equity markets demand all of the attention today. It was a great day of trade, with the markets ending positively after a great start. You had the broader markets too, which showed you good amount of traction, and it's with the advanced decline ratio, which was heartening to see in favor of the gaining side and with conviction. You had the auto stocks, which really led the way, so no surprises to see the auto index, which was higher by 2% today. You had some of the defensives which played catch up by the end of the day, so they were in the green too. FMCG was a little bit muted, and the cap goods index was the biggest loser. Some of the index gainers today, the likes of Sun Pharmaceuticals, featured on that list. ONGC provided quite a bit of support. Tata Motors and the entire auto basket, so names like an M&M, Maruti Suzuki also did well. And Asian Paints also reflected very strong momentum to end higher by 3%. But it was clearly all of the banking NBFC stocks which were in focus today on account of the Banking Amendment Bill which was passed in the Parliament yesterday. You had some of the large business houses such as the Tatas, the Birlas and Reliance, who will now come a step closer to entering the banking space after just last evening the Lok Sabha passed the Banking Regulation Bill, which has been cited by the Reserve Bank of India as a prerequisite for granting new bank licenses. Simran Gill and Anirudh Ghosh report.
The bill has finally been passed by Parliament, paving the way for the central bank to issue final norms for new bank licenses. And NBFCs and corporate houses eager to obtain the coveted license can hardly wait.
We have set for ourselves a vision to build a comprehensive financial services business. So in that context, the bank is a natural evolution that one needs to look at as a way of building it.
We have a very large non-banking finance business, and it can very naturally be very easily be converted into a banking business.
Analysts are billing NBFCs with a strong capital base and retail franchise like L&T Finance, Religare, M&M Finance and Shriram Transport as strong contenders in the race for bank licenses. While top corporate houses like the Aditya Birla Group, Reliance Industries, Reliance ADAG as well as the Tata Group have expressed their interest in applying for license. But while banks are gearing up for the prospect of increased competition in the sector, they aren't expecting the licenses to roll out in a hurry.
Challenges are, it is not easy to set up a bank overnight. You have networks, you have people, you have products, you have services.
The RBI had framed a stringent set of draft norms for new bank licenses last year, with a view to keep groups with high exposures to real estate and capital markets out of the game. Corporate houses have started tweaking their financial services subsidiary model since then. Even so, the final call on who will get to set up the next bank lies solely with RBI. And nobody's expecting the process to be easy. Simran Gill and Anirudh Ghosh, ET Now, Mumbai.
Okay, so apart from those stocks, there were a few other stocks which were in the news. You had Natco Pharma, which managed to hit a new high of 502 as it received the US FDA nod to launch Lansoprazole. Apart from that, you had Lupin from the pharmaceutical pack, which also received the US FDA approval to launch the generic Yasmin tablets, which has an annual US sales of $275 million. Bank of Maharashtra spurted in the session as it does plan to raise a proposal for fundraising on the 22nd of December, and it will be mulling a QIP or a rights issue for the same. Apart from that, IGL was a bit off in the session, as now the IGL PNGRB case has been deferred further to the 18th of March 2013. Real estate stocks once again showed you such good traction. So the likes of a Brigade Enterprises, we had exclusive information that they are in talks with investors for a QIP to raise 150 crore rupees by January. Apart from that, you had the likes of a Peninsula Land, a DB Realty, even a Nitesh Estates did very well in today's session, notching up a good double-digit gain. Apart from that, it was the shipping stocks also as pocket. They did very well in the session. So the likes of a shipping corporation, Bharti Shipyard, Mercator Lines, as well as a Great Offshore, all of them did very well in the session. You had an RCF which was in the limelight on the upside, as the Cabinet Committee on Economic Affairs is likely to meet this Saturday to take a decision on the divestment of the government's 12.5% stake in the company. Some index losers then, HDFC sulked a bit. You had Axis Bank, which was a bit weak. L&T by the end of the day lost quite a bit of ground, as did ITC from defensives. But all in all, no one's complaining given the kind of traction that we witnessed on the frontline index, which closed in well above the 5,900 mark. Where are the markets headed and what are the top investment ideas? Let's hear out some prominent market voices, starting with Atul Suri, who's bullish on auto and pharmaceutical stocks.
We've had a 30% kind of year, the year gone by, and my target for this Nifty move is 6730, which is another 14-15%. Consumption theme going ahead will also do well. It's just the definition of consumption will be broadened from pure FMCG to, it's going to pharma, it's going into, now I think autos are doing very well. So at the moment, if you ask me, I think the sector that looks very good to me is auto. The kind of breakouts that you've seen in some of the auto charts are fantastic.
IT services is another segment which I would like to own. Besides that, I think, there are a whole lot of stocks in mid and small cap segment which have done well and should keep on doing well going ahead. The big trade for 2013 potentially could be in, in engineering companies or some of these asset owners.
Meantime, in other stocks and news, Anil Ambani and his group companies have reduced stake in the energy arm Reliance Power through an offer for sale. The issue is fully subscribed, and Nisha Podar is here with the details of that transaction. Nisha.
That's right, Avan. In fact, the latest numbers show that 24 crore shares have been bid for, and what's on offer is really 15.2 crore shares, which makes about 5.42% stake in Reliance Power. And this OFS or offer for sale will really raise about 1,450 crore rupees for the shareholders. And the three shareholders who are selling this particular stake are the group companies of Anil Ambani Group, which is AAA Projects Ventures, as well as Reliance InnoVentures and Reliance Infrastructure. Now remember, this particular stake sale and OFS has been done to comply with the promoter shareholding norms of SEBI, or as per the SEBI guidelines, by way of which the promoters can hold only 75% stake and 25% has to be free float. So now with this stake sale, the promoters have come to about 75% stake in Reliance Power. But more than Reliance Power stock, which did took a dip in the trading today, I would look at the Reliance Infrastructure stock, because that is one of the promoter group companies which has sold close to 2% stake in Reliance Power and has, by way of that, made some money. And look at the stock price of Reliance Infrastructure also. It did go up today by almost 0.6%. So that is one stock to watch out for. But on the Reliance Power side, it did take a dip in the trade today, about 0.5% down.
Thanks very much, Nisha, for giving us those details. So getting bid for 24 crore shares versus the 15.2 crore shares that were offered. Meantime, the Lok Sabha today also passed the New Companies Bill 2011, and that's going to replace the archaic Companies Act 1956. The bill now awaits the passage in the upper house, but the new law aims to fuel corporate governance and bring in more transparency. What are the other important features? Let's take it straight to Devdatta Das to find out. Devdatta.
Absolutely. In fact, the Lok Sabha, in a historical step yesterday, cleared the bill. It's been 8 years and 186 changes after which this bill got cleared by the Lok Sabha. Not only that, the Rajya Sabha is expected to take it up for final approval today. But, you know, I mean, there are a lot of procedures left even after the Rajya Sabha clears it. But first, let's deal with what are the crucial points. The first, obviously, being the very controversial 2% mandatory profit to be spent on CSR. Also, there is the 5-year mandatory rotation of board of directors, of the independent directors as well as the auditors. The fact that independent directors will have more accountability to the board, to the shareholders, so that a Satyam-like scam can never happen again. There will be whistleblower protections. There is also a stringent and a more stringent disclosure norm for private placements for unlisted companies. A whole slew of these measures that is not only going to make corporate India or corporate functioning in India a lot more transparent, bring in greater corporate governance into the India Inc. system, but also make it a little more easier for India Inc. to keep a tab on their daily day-to-day activities of running a company. But at the same time, even after the Rajya Sabha clears it, there has to be a lot of rules that need to be drafted, and these are, remember, over 200 provisions for which minute rules will have to be now drafted, and which might take several months to over a year. For the Companies Act to become an official piece of legislation for India Inc. to follow, it will be some time from now.
Idea is not to make profit from your CSR budget. Idea is to give better quality of life to the people that you're working along with. If the companies are not able to spend that money for whatever reason, then they are obliged to state in their books of records, accounts, why they have not spent it. And if they don't spend, and if they don't report, then Section 134 will be invoked, they will be fined and penalized. Profit is not evil, sir, but the benefits of that profit must percolate down to the lowest sections of our society, and that is really the defining
The real estate space, and India's largest real estate company, DLF, has finally managed to sell off Aman Resorts for over 16,000 crore rupees. Adrian Zeka, founder of the Aman brand, has bought the property, and the proceeds are going to help DLF to trim its massive debt of over 24,000 crore rupees. ET now caught up with Sriram Khattar, Senior Executive Director, DLF, and asked him about the details of this transaction.
I do not recall the exact value of the purchase, but it was not 400 million, it was much lower. And significantly, the Lodi, which is a fairly big property in the center of Delhi, was carved out of the Aman Resorts before it was given to Goldman Sachs and Citibank to find a suitable buyer. So whilst in terms of the sales consideration, we would be more or less getting what we had paid for it, but Aman Lodi continues to be under the ownership of DLF.
So what plans for this particular property that has been kept out of the transaction going forward? What will be the plan of DLF as far as Aman Delhi property is concerned?
We have not yet thought of that, but it's a very beautiful property in the center of Delhi, and with the passage of time we will take a decision on how best to do it. Presently a very high-end hotel and service apartment are operating here and are doing very well.
So as far as the proceeds of this transaction are concerned, how will that be utilized by the company going forward?
See, significantly, as we had said in the beginning of the year, that some of the assets which we will strategically divest, they will go predominantly to repayment of debt, and that is what we still continue to do.
But are you on track as far as your divestment of non-core assets drive was concerned?
Yes, we are. I think at the beginning of the year we had given a guidance of divestment of 5,000 to 6,000 crores, and I think we will be able to achieve that.
Meantime, FDI in multi-brand retail was recently passed by the Parliament. Kishore Biyani, the owner of the Future Group and the retail king, spoke exclusively to ET Now on his business post the mega restructuring. Nish Apodhar started by asking Mr. Biyani about the mindset of foreign supermarkets in light of the recent Walmart controversy and various challenges which may act as hurdles for FDI in retail.
I think everybody is on the fence, wanting to understand more. People want a little bit more clarity. It's all about who comes in first and test the waters.
Right, your group is also FDI ready is what everybody's been saying after the restructuring especially, but still there is more clarity required on that. What was the real mindset behind this whole restructuring?
I think we call it realignment of our various businesses into specific areas. So there is a hypermarket, supermarket business now. And whatever businesses held are there are basically held for investment or for sale. Then we have a fashion business which has got consolidated. Then we have a food business which is a distribution FMCG business. I think we are giving options to the investors in terms of clarity of three businesses, how they will emerge, how they will shape up. And I think the exercise was done for simplicity, for the want of right skills required for that business, and choice for the investors to invest in whichever business rather than creating a complex organization.
Right, and if FDI in retail and you have to be a beneficiary of that, how soon is that expected to fructify since the restructuring is still going on, and have the talks really started on that front?
I think we believe that most of the realignment exercise which we have started should get over by around June. And I think business is shaping up for us in a consolidated manner. Things are becoming much, much clearer. For us, that is more important than FDI. FDI is an event which can happen. There is no urgency.
Since you have three businesses now and separately all aligned, which of the businesses you are more keen about? Of course, all of them are your babies, but then which one do you think is more promising going forward?
I think in terms of maturity levels, it will be fashion business, which is quite matured phase, which will grow significantly, which has 24 brands under it and close to 4 million square feet of retail space which will be available. In our hypermarket, supermarket business, we'll have close to 10 million square feet of retail space, 10,000 crores of business. So it's and the third business which we believe can emerge as one of the strongest business over a period of 5-7 years is our food and FMCG business, which has its own distribution out of KB's Fair Price shops, out of Aadhaar. We have done some acquisitions over there.
More news in the latest GMR Maldives controversy, and amidst those concerns over Maldives shying away from paying $800 million in compensation to GMR, sources tell ET Now that the infrastructure company is mounting diplomatic pressure from India. The top management of GMR has also met the National Security Advisor to discuss the way forward. Suchetna Ray now joins in with the exclusive details. Suchetna, what are you picking up regarding the same?
While Maldives is rethinking the compensation bid, GMR is not ready to give up just yet. They have already claimed $800 million in compensation that is due from Maldives. Senior sources in the government tell us how the top management of GMR wants to keep the diplomatic pressure on the small archipelago, and that is why they have met with the National Security Advisor. Informed sources tell us that while this process of arbitration goes on, one of the legal options for GMR is to approach the Singapore court with a petition which will ensure that Maldives deposits $800 million, which is the compensation amount, in an escrow account. This will ensure that even if GMR wins this arbitration case, at least this amount will be finally paid to GMR. This is coming amidst fears that Maldives is not only terming the contract illegal, they're also giving the entire amount that has to be paid to GMR a huge rethink. We did get in touch with GMR. The spokesperson there has refused to confirm it, calling it speculative, but informed sources in the government tell us that this is a legal option which is available to GMR, and the company is mulling it.
Thanks very much, Suchetna, for those details. So we'll have to wait and watch as to the kind of legal recourse that GMR takes. Straight to the IT arena, and Infosys co-chairman S. Gopalakrishnan says that 2012 has been a difficult year for the IT industry, but things may brighten in 2013. However, he maintains that the uncertainty will continue to worry the industry for at least the next 3 to 5 years. Let's listen in.
So the year that was a difficult period, and I think we hit a trough in some sense because when things slow down, it takes a little bit time for the slowdown to impact the IT sector, because the IT sector in some sense is a support sector. So it takes some time for the IT sector to see it, and we did see it in 2012. I believe if things don't deteriorate further, and what I mean by here is that nothing untoward happens in Europe, or for example the fiscal cliff in the US is managed and is taken care of. So if nothing untoward happens, I believe 2013 could be a better year. But the uncertainty is still not gone. I think we are going to see a period of uncertainty for the next probably 3 to 5 years. So clearly, from a technology perspective, I'm actually very excited, especially in the medium to long term. Information technology can still improve productivity, improve our quality of life significantly with cloud, with mobility, with social networking and Internet of Things.
Okay, so that's a pretty optimistic outlook for FY13 for the IT sector. Meantime, with a slew of IPOs coming on board, SEBI Chairman UK Sinha has hit out at India Inc., saying that they leave very little for retail investors. He says that in the last 3 years, of the total 117 issues that have hit the markets, 2/3 of them are trading below the market price. That, he says, raised questions on the credibility of the markets itself.
In the period between 2008-9 and 2011-12, there have been 117 issues. Out of those 117 issues, 72 issues, that is about 2/3 of the issues, were trading not only below the issue price, but also below the price which has been adjusted for the market decline. Today I am finding that the Indian investor, especially the retail investor, is thoroughly confused that what is it that he should expect from the primary market. It has become a question of credibility for all of us.
And the advance tax numbers have been released, with Bollywood superstar Akshay Kumar retaining the taxpayer's trophy with a 9 crore tag. Salman Khan is a close second. Let's get in Vijay Iyer with the details.
The top 100 corporates did indeed shell out very good healthy advance tax for the third installment. On the other side, individuals have also chipped in with their part when it comes to shelling out the third installment of advance tax, with Bollywood biggies including Akshay Kumar paying 9 crore versus 6 crores on a year-on-year basis. Salman Khan paid 8 crore versus 4 crore. Ranbir Kapoor 4 crore versus 2.6 crore. Hrithik Roshan 2.25 versus 2.25. Kareena 2.5 crore versus 2.0. And from the legal illuminaries, Zia Modi shelled out 2.6 crore versus 2.25. Janak Dwarkadasan, one of the leading counsels in the Bombay High Court, shelled out 2.15 versus 2.15, and AZB and Partners, one of the legal advisory firm, shelled out 2.25 versus 2.5 crores. So on that aspect, the individual numbers of third installment of advance tax are also looking healthy. A good indication coming in for the finance ministry, particularly at a time when they are going all out to raise all revenues and turning no stone unturned, because the biggest challenge for them is to try and keep the FIS at 5.3%, which itself is more than what 5.1% which was earlier estimated. So yes, the third installment of advance tax is showing an overall growth of 15%, which indicates that there are indications that the All India direct tax numbers of 5.7 lakh crores could be met. Although it would be important to see would the momentum continue in the last fourth quarter left. But yes, there are good indications coming of the economy recovering, that in turn ensuring that tax flows or revenues are coming in for the finance ministry.
Thanks, Vijay, for those details. Stand out right here on Business Day. Thanks so much for watching. Keep it with ET Now.